Welcome to Talk Law Radio with attorney Todd Marquardt of the Marquardt Law Firm at marquardtlawfirm.com.
Welcome back to Talk Law Radio. I'm Todd Marquardt. We're talking with Tony Tylman, who is a business owner, a lender, and investor.
Yeah.
Yeah. So,
All around great guy too.
and I didn't ask you about your family. Do you want to let the listeners know something personal that you're okay with?
Hi, Kim. Hi, Carrie. Hi, Jags. Yeah, I've got a great wife, 32 years married. Yeah, Kimmy, she's awesome. She cooks. That's why I'm this way. And yeah, we've got dogs and we've got cats.
I saw your
kids.
chief happiness officer in one of your videos.
Yeah. So
will you tell the listeners how to find you on YouTube?
Sure. You can find me on YouTube by going to TonyTylman.com, TonyTylman.com. And if you need to call me, if you're interested in any of this, 210-710-6141 is the best way to reach me. Text or call. Just heard you from Todd's show.
Cool. So Joseph, I was telling you last segment that I worry about the beneficiaries. If somebody did use all the equity in their house to finance their health costs or big expenses like fixing the roof or the foundation, and the kids didn't get to inherit the house, are there some other financial tools that people can use to make sure that they can have their cake and eat it too?
Yeah, I mentioned a few. I talked about, the owner financing is one. You can stay in the house. You can, but it really has to do with planning early, because if you have an emergency fund, then you don't have to worry about the AC going out, having to, take on a loan for that.
Well,
even credit card debt.
I've met some older people that have a mortgage or a traditional mortgage, or they have a second mortgage.
Yeah.
I don't run into that many people that are talking about reverse mortgage. So you have a steep hill to climb there, Tony, but they also have cash value life insurance. And so I wonder if somebody could use that to make sure that they leave an inheritance for their beneficiaries.
That could also be a way. So you could, if you had life insurance as well, that could be like, okay, the house is fine because we already have this inheritance that we're going to pass to the kids.
Mm-hmm. Or pay off the house if they really want to keep the property.
Yeah. So there's planning if you have time to do it, but it's kind of like going in the past. But, life insurance is important to have, especially if you do want to leave money tax-free to your kids.
Right.
Right. And, things like having an emergency fund, having the right amount in there, having investments, really planning. You want to have a lot of options, right, for what you can do. And like I was saying, there's all these tools and tactics that you have, and they're all on the table. And I was even talking about how wealthy people use reverse mortgages.
Yeah, you wanted to ask Tony.
That's a question.
that.
Yeah, I was very interested in, and I want to hear about. But there's all these tools that you have. You want to give yourself options where you can pass money to the kids. If you have a life insurance policy, it doesn't seem as daunting to get a reverse mortgage, right? Because it's not like the risk is something you may not have to worry about.
Right.
Yeah.
So tell us about how the wealthy might use a reverse mortgage.
Well, it's an investment opportunity for them, right? So they can pull equity out of their house instead of having a payment. And again, the product isn't right for everybody, and not everybody should have a reverse mortgage. I think it's a tool though that can really bridge someone who is not making ends meet, that they're just getting by. And that's what we kind of focused on the last, is live your best life. And to live your best life, to get the hydration and the massages and the physical therapy and the medications that you need, then it's a viable vehicle. And you mentioned something interesting, Todd, because you're saying, hey, what about the heirs, right? Because this equity is getting eaten every month.
Yeah.
It's growing up. Well, who's paying for the parents when they're going through what they're going through?
Right.
Shouldn't the kids be at the same, that's almost a flip side, is shouldn't the kids be stepping up? This is a way to give the kids relief that they don't have that obligation.
Oh, right.
And it also makes the parents feel good because they don't want their kids.
They don't want to be a burden.
That's right.
Yeah.
That's right. So that's where that can also come into play. as far as the wealthy looking at it, it's another tool that they can, they could get a home equity loan. And if they're wealthy, they might qualify for an equity loan. Might make better sense because the interest rates and the costs are a little bit lower. Yeah. Or they look at it and say, hey, I don't want that monthly obligation associated with it, but I do want the availability of those funds. Mm-hmm. So that's how they could use it. And then they'll take that money and they'll use it for different things, for investments, or even, how about this? How about philanthropy? I look at people who are, I go to church and there's a lot of elderly people in the church, and man, they would love to make a donation. They would love to, help support something that they believe in. Mm-hmm. And my deal is, why do you have to wait until you die to make a contribution?
Right.
Yeah.
And this is a really neat opportunity that you could use this to say, hey, you know what? I've got an extra. If I take out $150,000, I could give $20,000. I could give $30,000, or give money on a monthly basis. They have that ability to feel good about themselves. When that plate comes around in church, instead of passing it along, they're able to write a check, a meaningful check, mm-hmm. to things that they believe in. And it doesn't have to be church. It could be whatever their cause is that they believe in. They can make a difference. And without that product, they might not be able to make that difference.
Great point. I want to ask some estate planning specific questions related to real estate. Can somebody get a reverse mortgage if they've recorded a transfer on death deed or ladybird deed, life estate deed?
Oh, you're playing stump the lender right there. Well done. Yeah, I don't know the answer to that.
Okay.
Yeah,
same question with a revocable living trust.
Okay,
you ever run into that?
2-0, Todd. Yeah.
Okay, well, we'll look into that and get back to you.
You set me up, man. I wasn't ready for that.
I should have asked you the other day when we were talking on the phone.
Figure out.
But I just thought of it today because I was giving a talk at Oasis about transfer on death deeds, and so it was kind of stuck in my mind. Now you do more than reverse mortgages. Tell us about some of the other tools in your bag.
Yeah. So my basic business is people buying houses or people needing to refinance their houses. So it's purchase money, it's refinance. If somebody's on a VA loan or a FHA loan right now, FHA and VA rates are in the 5s. A lot of people bought in the last 3 years at 7 and 8%. So it may make sense for them to look at refinancing. That's again the core piece of my business. Mm-hmm. But I'm passionate about helping older adults. That's where the reverse side comes in. And then the other piece is helping really wealthy people understand tax advantages and how they can save money. And so there are some ways that the super wealthy, not super wealthy even, like you make $400,000. You're going to have a $80,000 obligation to the IRS. Mm-hmm. That's a lot of money, $80,000. Mm-hmm. Well, think about what if you could keep some of that $80,000 or all of that $80,000. And that's where real estate comes into play. And that's where some financing techniques come into play. Some advanced accounting comes into play. And what we've found is that it's really tough to get good advice in investment real estate. So only 11% of realtors own investment property. What's that tell us? They don't know what they're doing, right? They don't believe in it. They don't have it.
Right.
They can't identify it. So I have a project right now. I'm trying to buy a house. I have to close on it by the end of the year because I'm trying to wash away my income with the tax benefits that are available because of what Trump did in 2017 and what they just recodified in the big beautiful bill this summer. So there are opportunities where all the income I've made on all my other transactions and all my business, I can wash because my wife is an accredited investor. Okay. You have to qualify for this, but because she qualifies, because she manages our real estate portfolio, we can buy a house, and instead of paying the IRS $100,000 this year on our obligation, let's say, I can take that $100,000 and put it down on an investment piece of real estate. And now I own an asset that's going to grow in value. And now I have a huge write-off. So I have a write-off of I have an ordinary loss against my ordinary income, mm-hmm. and I can wipe my income out.
That sounds really complicated. If somebody calls you, can you help them with that?
I can, absolutely. So again, I can be reached at 210. My name's Tony Tylman, 210-710-6141. Now, I have a doctor client made $800,000. That's a lot of money. So in 2023, he spent $300,000 of his paychecks were taken out to go to the IRS. That was his tax liability, $300,000. After we showed him what to do, his tax liability went down to $25,000 in 2023. So he started 2022, he paid $300,000. 2023, he paid $25,000. 2024, he paid $0.
Wow.
Awesome. You know,
Same income.
I'm looking for people that own a multi-million-dollar house and earn more than $500,000 a year, some of which income is produced by assets like rental properties or treasury bonds or interest or dividends because of the SALT deduction, the state and local tax. When you have a multi-million-dollar home, your property tax is high enough to want that deduction. And if you earn more than $500,000 a year, the SALT deduction is phased out gradually as you earn more. So if I can offload some of those income producing assets into a trust so that now that the trust has to deal with that for the beneficiaries, you know, I love the beneficiaries, then we can help those people get a SALT deduction when it might have been phased out.
Interesting. So again, there's multiple levels of how to deal with any kind of financial planning
Tax
or
strategy.
even estate planning. So,
Right.
yeah, you're talking about things again, stump the lender. I don't know. And I'm like, okay, I got to learn more about
Well,
that SALT deduction.
you
That's
mentioned the
interesting.
physician that causes my spidey sense to go off.
I have, it's, you know, the physician is a great resource because they're usually not self-employed. They're W-2. And when you're W-2, you have, that's where your employer gives you a paycheck and takes out your deductions. You don't get any write-offs. You don't have that ability outside of your standard deductions. And I think real estate was $10,000. And on the property taxes, which is, you know, just an average house right now. So,
Yeah, we got to take a break. We'll be right back. We'll be talking about legacy. Stay tuned.
This has been Talk Law Radio with attorney Todd Marquardt, brought to you by the Marquardt Law Firm. You can learn more at marquardtlawfirm.com. And be sure to listen to the full Talk Law Radio show Saturday mornings at 11 on 9:30 a.m. The Answer.
Most families don't realize they have hidden legal blind spots until it's too late. Wills, trusts, Medicaid planning, even protecting a business. These are the kinds of issues attorney Todd Marquardt helps uncover before they become problems. Todd is the host of Talk Law Radio, where each week he guides listeners through the legal challenges families, veterans, and business owners face, while showing them the practical steps to protect what matters most. Catch Talk Law Radio, Saturdays at 11 a.m. on 9:30 a.m. The Answer, 6:30 a.m. The Word, and now in Houston on AM 1070 and 103.3 FM The Answer, or anytime on YouTube. Planning isn't just about documents. It's about peace of mind, security for loved ones, and building a legacy that lasts. Don't wait for a crisis. Do it before you die.